Like many of us, I'm sure you're feeling it. Business is hard. Now more than ever, you need to have a plan to help your business not just survive, but thrive. And it can happen as simply as thinking with the end in mind. I'm Marcia Reiner, a business growth strategist. I've helped tons of small business owners to establish and implement a tangible plan that guarantees increased profitability, guides your growth, and plans for your future exit. Because a business worth selling is also a business worth owning. And I'd love to share some strategies that I've earned and learned with you on today's Profit with a Plan podcast. But before we get started, I have something to share with my listeners. I put together an insightful, think outside the box live webinar on Wednesday evening at 6 p.m. Pacific time. It's specifically designed to help you learn how to turn your business into one worth selling, even if you aren't thinking of selling it yet. Why now? Join me and find out all the benefits that come with a sale-ready business. Join me for free at exitwithaplan.com. I'm excited to have my guest on with me today, Marvin Storm. Marvin has more than 30 years of experience in multi-location operations management, mergers, acquisitions, and developing and executing business exit strategies. After receiving his bachelor's in science and accounting, he spent his early years with the Big Four accounting firm. Since then, he has launched and acquired businesses, worked with executive teams nationwide, designing and implementing business growth and exit strategies. And he's also a fellow host of a podcast called Business Exit Stories. Finally, he's currently writing a book on the art and science of executing a successful business exit strategy. Marvin, I'm so happy and excited you're on the podcast today. Welcome to Profit with a Plan.
Well, this is exciting. Nice talking to someone that's really kind of dialed in on scaling businesses and positioning them for an exit.
You know, and I think it's something that the business owners often don't think about. They're so tangled in the muck of trying to, chase clients and put out fires that they forget that there's a plan and there's a future exit and a whole lot of money on the table if done well.
I often get the question, probably one of the most frequently asked questions I get is, why in the heck would I want to spend time thinking about an exit years in advance? I'm so busy running my business. I don't have time to think about an exit. And I get it, being an entrepreneur, you have those long days and sometimes 7 days a week and you're pedaling as fast as you can. Who has time to think about an exit? But those that don't, sometimes squander a huge opportunity.
Back in my previous life, we were always talking about you're going to exit. Is it going to be planned or is it going to be unplanned? I promise you, there will always be an exit. And I find that from my side of the view, you're gonna have so many more opportunities when you're ready and you've planned for it than if you just go, oh my gosh, maybe it's a health or an injury or some scary opportunity that took the business out from underneath you. What are your thoughts on planning and when might be the best time to start?
Well, it's interesting you should mention the planned and unplanned exits because that's really the title of my book. It's going to be called Pack Your Parachute. And it's really based on the metaphor that pilots don't pack their parachute when their engines are on fire and they're in a tailspin. They have that parachute ready for unexpected emergencies, and if they need it, it's ready, and they can grab the parachute and head for the door and to exit the plane. And businesses are really no different. As you mentioned earlier, that these planned and unplanned exit, especially the unplanned ones, tend to sneak up on you, and you have no idea they're coming. And if you're caught flat-footed and totally unaware, getting back to my metaphor, if you don't have your parachute packed, then it's a fire drill. Then you're scrambling to, put something together. And generally, when you're in panic mode and making decisions that you don't have thoughtful time to consider, things generally don't turn out well. And a lot of that value that you've spent years and maybe decades, and in some cases a lifetime, building up this enterprise value in your business, you don't get a chance to optimize that. And that's really sad in many situations. And on my podcast, it's really based on this premise of stories. Good stories, bad stories, some really ugly stories, as told by the
Yuck.
people that make deals happen, help and facilitate exits for entrepreneurs. And these are the mergers and acquisition advisors, business brokers, CPAs, wealth managers, people that are somewhere involved in the transaction flow of a business. They tell their war stories and some of the takeaways for the good ones, and some of the lessons from learned from the bad ones. And as I think back on why I started the podcast, was really I stepped away from my business, and if I'd have been a little bit more dialed in to the process, I'd had several smaller exits in my career. But this last one was kind of a different scale, and I thought I knew certain things, but it turned out that I really didn't. I really
Mm.
didn't know what I didn't know. And if I had known or had a little bit more insight, I could have, optimized or maximized some components of my business that I didn't. And that's really why I got to thinking about that after stepping away from my business, about there's probably a lot of other people out there like me that probably could use some insight and could learn from others so they don't have to walk through the minefield and step on those mines that they don't know that are there.
You know what? That's a really good story about what coulda, shoulda, woulda happened
Hmm.
with an asset that is, as you mentioned, decades in the making or a lifetime in the making. And to just leave that asset to an unknown ending scares the heck out of me. I watched both of my parents do just that. Mom had ran a fantastic mortgage business and had the opportunity to sell and didn't because she wasn't ready to retire, and left significant money, close to $1 million, on the table. And it just breaks my heart that people aren't thinking about that strategy and the ways that they can impact.
Hmm.
What we used to think our home was the largest asset that we own, but as business owners, the largest asset that we own is our business. But they're not thinking with that end in mind.
Yeah, and I get it. I mean, I've sat in that chair. I understand that. I made the same, fatal mistakes and flaws, and in how I thought and what I actually did. I mean, I had some things done right. I mean, I had actually thought, because I took outside capital, I took private equity.
Mm.
And one of the things that I didn't, I understood the words when that
Uh-oh.
private equity, has a timeline.
Uh-huh.
The the general partners of a fund, they have unlimited partners and investors in their fund, and they're expecting a rate of return, and they need a monetization event to realize those investments and returns on those investments. And even though I heard those words, until it really, crystallized in a board meeting saying, okay, we've been in this for 5 years now. We need to start,
Time to
planning
sell.
for an exit. And I wasn't ready.
Mm.
I intellectually understood it, but I wasn't ready. And then, I had an obligation. I had commitments that I had made, and
Yeah.
it wasn't my decision anymore. And so timing and the type of things that I was interested in building long-term value, and what my partners now, my financial partners, had in mind. They diverged at some point in time, and you know, even though I understood, as I said, the reality set in when I had a timeline to actually work toward now pulling the trigger and stepping away from the business. And I did so reluctantly. And because the timing for me personally wasn't
Hmm.
right, I still had more giddy up in my
Sure.
pitch, that I didn't want to step away. So that was a
And I think
lesson, a hard lesson to learn.
it sounds like it. And I think people often forget about the influx of capital and who helps make decisions after that point. And
Mhm.
if their decision is to achieve a monetary goal, then you took their money. You have to follow what they say at a certain point. So that is the scary side of expansion and looking for capital um, from different avenues other than the bank,
Mhm.
where you just pay it back. But you know, how do you set the mind? You talked about you weren't ready. You thought you had some giddy up. My mom, I experienced her. She wasn't ready to retire yet and left that huge money on the table. But in your case, you thought you could do so much more for that. When does that mind shift kind of happen when you realize, okay, now it is time to sell? And what's that window like when you finally make that decision?
Well, it's a great question, and one that I think doesn't have any real definitive, firm answers. And the advice that I would give from, listening to literally hundreds and hundreds of transactional stories on the podcast that I host, one of the common threads through all of these stories is first that there are no perfect exit plans. They just really don't exist, because it's like Winston Churchill, or maybe it was Dwight Eisenhower said, when they were, deep into the World War II,
Mm,
strategizing and, running their campaigns or war strategies and campaigns, is that, they come to a battle with a battle plan. And that battle plan is great until the first shot is fired. And because things become fluid at that point in time, and things are happening in real time. And I think that for the most part, running a business is somewhat the same.
mm.
You have a general strategy and plan, and it sounds great, and
On paper.
until on paper, until business happens,
Mm,
and things change and evolve in real time. But what a business plan does give you is a target uh,
mm.
that you're headed toward. And you're going to go right and left and up and down and into the weeds.
Yeah,
But as long as you can see out on the horizon there
right.
that there is a goal that you're heading toward, that is your North Star. That is your
Mm,
compass. That will keep you on target, moving toward an eventual monetization event.
mm.
And that's going to change in scope. It's going to change in timeline. It's going to change in the size and scale of your business, and your personal goals and objectives will probably evolve and change over time. But one thing that starting to think about a general point in the future keeps you focused and moving forward. If you don't have that North Star there, you tend to get off your path, and sometimes you can end up in a different state, completely not where you
Yeah.
thought you were going. And so that would be my advice to kind of address your question. What is the mindset? What is the objective or goal? And that is really to get into the frame of mind that, just like you said, you're going to have an exit. Is it going to be a good one or a bad one? I don't know, because there's only really three buyers, uh, three things that can happen to your business, and a couple of
Hmm.
type of buyers. You're either going to sell your business to someone that that's inside the company, an employee, a family member, a partner,
Right.
a group of people in the company as a management team or something like that, or you're going to sell the business to someone you don't know, a third party. And those are different type of buyers that have different types of needs. And the only other alternative is that you're going to wind down your business, close it, or maybe involuntarily be pushed into bankruptcy or something unfortunate like that. But when you think about it, if those are the only three things that can happen to a business, you're going to sell your business to someone you know or pass it on to someone you don't know, third party, or you're going to wind it down in one fashion or another, then I think it's probably smart that you kind of figure out which one of those kind of fits your situation. And
Hopefully not the third.
maybe winding it down is really the best option. You may
Mm,
have no one in the business that you're going to sell it. You may believe that your business doesn't have any value and you're just going to sell off the assets. So I'll tell you an
mm,
interesting story. This is a personal story of someone that I knew that was a personal services business, really didn't think
mhm,
his business had a lot of value. He made a great income because he was
mhm,
selling his expertise and he was selling his knowledge. And he, in essence, sort of was the business for the, how it was structured and how he designed his business, and was able to charge a very handsome retainer and ongoing consulting fees for what he did. And when it came time to kind of step away and retire, uh, he was just going to sell off his assets, all of the things that he'd accumulated, at really auction, just liquidate what he had. And he thought he may get $25,000 for, selling off those assets. And once I found out what he was doing, I said, "Hey, well, let's chat." And
Wait a
we
minute.
got together, and within a few hours, I, kind of outlined that he really did have some intangible assets that he didn't really
Yeah.
assign any value to, and that was his customer list, that was his brand. He had a phenomenal website and a great reputation in the market, and that was had value to somebody else within his industry. And it
Yeah.
didn't take long for him to kind of shift his mindset and move into thinking about how he could monetize those intangible assets. And he walked away with, you know, several hundreds of thousands of dollars of what he thought was valueless. And so he
So
got
true.
10x of what he would have gotten in a
I love
liquidation.
it.
So I believe almost any business can be sold because there's a buyer. It's just like a house,
Mm,
for every house out there, there's a buyer at some price.
mm-hmm. Mm-hmm.
And you just have to sometimes put lipstick on that house, paint it and do some landscaping and things, but
Yep.
and dress it up a little bit. And businesses are the same way, quite frankly.
Yeah.
If you can position and tell and create a story around why you're exiting and what the value of the business is, it will have value to somebody. And they may have a lot more value than it would have for you because of how they're positioned in the marketplace and what they do. And they may have a customer base that they can plug your customers in and monetize,
Mm.
what you do to their customers. And I just have so many stories that I've shared on my podcast that is exactly what happens when a strategic buyer comes to the table and will often offer multiple times more than what a financial buyer would write a check for. Because
So true.
strategically, it makes sense for what they do, and they can recapture what they're going to pay you for the business multiple
Mm-hmm.
times, sometimes within a year or two.
That's a fantastic story. And it is perfectly aligned with my target audience of people thinking, oh, well, I'm just a professional services. So I'm the business and can't sell it. But your story really added that real, real life history of what it can be, and not looking at it at, oh, only the M&A buyers are going to come in and they only want to see the multiples of your income, and these kind of crazy things, where there's so much more: the intellectual property, the branding, the idea that they
Mhm.
have, and the use of that product in with their clients, or what their product can do to my clients that I'm selling with. You've just outlined tremendous value, and I think that's the piece that most business owners are forgetting. Sorry, I have the garbage guys going by, and my dog thinks she wants to eat them. So, there's noise in the background wherever we are, but it's just a missed opportunity that so many people miss. Besides the fact that I think one more little story is that oftentimes someone wants to bypass that startup struggle, right? And if they can buy a business that's already existing and rolling, I mean, right? I'm sure you have hundreds of stories that are talking about, I just wanted to get something that was, the train was already rolling and I wanted to jump on and make it better, right?
Absolutely, because there are a whole host of buyers out there, and the buyers at different levels. There are buyers that fall in the bucket of, I want to go to a place every day. I want to, you know, build on something that's already there. I'm not the
Yep.
type of personality can start something from scratch.
Mm-hmm.
I'm an executor. I spent my career in corporate America executing on budgets and plans and within a department or a company. And that's what I want to do. I want to be the worker. I want to show up every day and just have that
Get her
feel of
done.
contributing and getting it done, as you said. And then there are buyers that, that's not their gig. That's not what they want to do. They want to, work on the scaling of a business. They don't want to come in every day. They want to work on strategy, and they want a business that already has a management team in place. And then there are buyers, like I said, that are corporate buyers that, look at a business strategically, and they look at what you do and how it plugs into their business
Mm,
model. And some companies grow by acquisition. That's how they
yeah.
create growth. And so there's different types of buyers out there. And one of the things and advantages that, going through the thought process of what my business is all about and who that buyer is going to be down the road will change everything and how you look at your business and what you
So true.
do to position the business to appeal to that buyer. Because if you're going to sell your business to someone inside of the company that knows your business and that has been coming in for a decade or two, and is not going to miss a step when you hand them the keys,
Hmm.
you do things differently in preparing
Yeah.
for that type of exit than you would to someone that doesn't have a clue who you are, doesn't know your ethics, doesn't know your background, and they're assuming that there's a whole bunch of skeletons in the
I was
closet. So
just going to say that. They're
they're going
looking
to
for
do
the
a
skeletons.
they're going to do a deep dive, and give you that
Look at your dirty
colonoscopy that
laundry.
yeah, they're just
It's
going
not
to
worth this
want.
much.
Yeah. And so, and you do different things, and so you want to have different type of preparation that you go through when that type of buyer steps to the table. And quite frankly, a strategic buyer could care less about your financials sometime. They're not even they really don't care,
They're looking
because
at the product capability or the client capability. Yeah.
how they can monetize it. Whether
Yeah.
you make money or not in what you're doing in your business may be irrelevant to them, because they just see that they have 100,000 customers that are going to spend $3,000 on your service or product, and that translates into a lot of money on an annual basis to them. And so they're willing to pay up for that.
Yeah. So how do you advise a client that is unsure whether Junior or the team's going to buy it, or the outside competitor is going to buy it, or they're lucky enough to have some sort of product or service like the tech world that someone's just going to buy them, like a Google is just going
Mhm.
to buy them and gobble them up and could care less what everything is doing? What would you recommend to a business owner that's a little unsure of what path that might look like to maybe cover all the bases?
Well, it's a great question. And I think the best advice I could give is that so often entrepreneurs are of this mindset. They're the can do type of people. They are in business for themselves because they enjoy the challenge of building something from nothing and walking through walls and looking around the corners for new products and services of
Yeah.
what the future is going to look like. And that's just who they are.
Hmm.
And they get their joy and their satisfaction from solving problems on the fly. That's just how they function and operate. And they make the assumption that when it comes time to exit, that they're going to be able to make decisions the same way they have in the
Mm.
past. Just do it on the fly. Unfortunately, the data doesn't really support great outcomes when you approach your exit that way. And so you have to be a little bit more thoughtful. So the best advice I could give someone is to surround themselves, just like an entrepreneur should surround himself with good, competent people in his team that are smarter than him in certain aspects of what they do and what their skill sets are. You should approach your exit the same way, and well
Mm.
in advance of the final
Yeah.
event, of surrounding yourself with good advisors. That may be a business broker, an M&A advisor. It may be a CPA.
There
It
will be
may be,
taxes involved. Yes.
there will be
CPA.
taxes, and generally that's an afterthought in a lot
Yes.
of
And
situations and
then the
cases.
wealth. Yeah.
That just disappears into thin air, which it doesn't have to happen actually.
Correct. Well
But you
planned.
need to
Well planned
you
doesn't.
yeah, you need to have someone that can give you insight. It may be a transaction attorney working within your specialty or vertical niche. It may be, an intermediary like an M&A advisor, business broker, as I said. But you need someone that has some insight that you don't have, that can
Right.
tell you what the landscape is like, what the valuation methods are, and who the
Mm,
buyers are out there. And
mm,
some intermediaries out there have a client list of people they deal with on an everyday basis, that they can simply pick up the phone call and make a call and bring buyers to the table because they are well networked and connected within the business or industry that you're in. And so
yeah.
you never want to discount that, because so often entrepreneurs, just don't like to pay those referral or finder's fees and commissions to someone that works on a success fee basis. They think they can do it themselves because they're that do-it-yourself type of personality. But
Right.
rarely is that a good strategy, because entrepreneurs become really good at what they do because they do it
But
every
they're not
day.
good at everything.
They're not good at everything, and they probably are not very good at optimizing value at exit.
Right.
That's just a different set of rules and things that you have to take into consideration to be able to, optimize the value of that you've created over the years. And I would say that a 9.5 times out of 10, it is a better strategy to have a great partner in positioning your business for an exit that's done it 100, if not 1,000 times before.
Yes, excellent, excellent advice. And early enough where the changes can be affected and implemented in a timely manner without being under the gun of, oh my gosh, I gotta fix this fast. I'm a big proponent of, starting with the end in mind, start on day one, if you can, about thinking of what you can do and how to position your place along the way. It actually changes decisions and directions that you would take if you're thinking about how you're going to exit. Even when you're thinking 10, 15 years down the road, I'm not going to retire now, but I'd love to be able to have this as an asset that I can retire with, and start making decisions that make your business um, more profitable, more wealthy, more attractive to those buyers, the potential buyers that are
Absolutely.
coming down. So fantastic.
Yeah,
Marvin,
I
this is
think I just want to one comment I want to make is that you had mentioned it earlier, and one of the comments you made is it's a state of mind.
mm,
It's a thought
yeah.
process.
Hmm.
And so you make decisions differently when
Oh,
you
totally.
have an exit in mind. A simple thing like signing a lease, if you are property intensive in your business, just the
Or
terms
taking on
and
capital.
taking on capital, the terms and those arrangements will have a big impact on the value of your business and the smoothness of that transition.
You're so right. It's even buying other assets that are part of your company. Say if you're thinking of selling your business in the future, it's simple off idea of buying your business building, but maybe buying it under a different uh, um, corporation than the business itself,
Mhm.
because then that business can become, the property can become an asset to the business, and the business can pay, the property for you. So I mean, it's shifting and thinking, like you said, that mindset for your future on how you might want to deconstruct the company in the future and exit the company, that you make decisions now that benefit that. So fantastic.
Yeah. Yeah,
Love
the
this.
example that you give in real estate is just one of dozens of things that you can do to optimize value.
Yeah, love it. Love it. Love it. Marvin, this has been really good, really insightful. And I know listeners are going, wow, I didn't think of it that way. I just thought that, I'd pull the trigger someday and off I'd run, or maybe 6 months before I pulled that trigger, I'd make some phone calls. Um, where can listeners find out more about you and what you provide and your future book?
Well, probably the best thing to do, and I wish my podcast had been around when I was exiting my business, because this Business Exit Stories podcast is just about stories just like your business. You know,
Hmm.
people out there that are listening to your show here. It's just hundreds of stories that went well, some that didn't go so well, some that took longer, some that kind of blew up, and the takeaways, so
Hmm.
that the individual business owner doesn't have to make some of those mistakes. And every podcast has 4 episodes, 4 stories in it, and they're quick and kind of intriguing and unique, because every situation is a little bit different. So just go to wherever you get your podcast and type in Business Exit Stories and find the podcast and subscribe. And also, I found that people that do listen to the podcast kind of want to know what's kind of next, and so I've prepared a little report that talks about optimizing the value of your business substantially. And so you can get that report by just going to businessexitstories.com/report 2, the number 2, just /report 2, and you can download that report. And I think you'll find it an interesting read, and it will give you something to think about if you're a business owner out there.
Love it. And so important, because, this, like I said in the beginning, this is our biggest asset, even beyond our house. And we need to think of it like an asset and make those great
Mhm.
decisions along the way. So with your stories, they're fantastic. The podcast is great. And it's always better to be prepared than behind the 8 ball, reacting to all the things that could come your way. And just, both of us are proponents of the early plan. I can see that for sure. So thank you so much for coming on today.
Well, thank you for having me. It's been delightful, and thank you again.
Absolutely. So, listeners, I hope you found a couple ideas to put into your business that will help you become more profitable. I know just thinking about that in the future and picking up that report on Marvin's site will be so much helpful for you. So much help to be able to start shifting that mindset. So don't forget, now more than ever, it's important to build your business like you want to sell it. Don't forget to register for my new web class on how to turn your business into one worth selling, even if you aren't thinking of selling it yet. There are tons of benefits, as we discussed, to having a sale-worthy business. It'll be on Wednesday at 6 p.m. Pacific time. Go register for free at exitwithaplan.com. You sure don't want to miss this class. And Marvin and I would love to hear your questions and feedback. Give us some comments, or maybe some horror stories or experiences you've had, or maybe even something you've done to put in your business that you think will create more value when you're ready to sell it. So comment on today's podcast, and don't forget to subscribe. You can always catch Profit with a Plan on any of your favorite podcast players. We're looking forward to more profitable information on next week's show. So until then, make your plans and profit with them. Thanks again, Marvin.
Thank you.